Hello guys and welcome to another video. In this video I will be talking about the simple way to get rich. Okay, now if you've been watching my other videos, you understand that the three that keep most people poor are debt, inflation, and taxes. Okay, this is especially the case, well, it's similar around the world, but this is especially the case if you are in developed countries. Okay, most people do not understand how debt, inflation, and taxes work and how they can use these three things to make themselves rich. Okay, which means that once you understand how it works, then you will be ahead of at least 98% of the people around the world, which also means that you won't really have to work really hard for your money, because you will be using the system to kind of help you get rich. Okay, so the first one is debt. Most, if not all, people who have wealth have used debt, other people's money, to become rich. What most people don't understand is that there are two types of debt: good debt and bad debt. Good debt is something which makes you rich. Bad debt is something which makes you poor. And an example of a good debt would be, for example, buying an investment property. Okay, you get someone else to loan you the money and you buy the property, which you know for sure is going to go up in price, barring certain recessions and fluctuations in the market. Okay, real estate in the long term almost always goes up. An example of bad debt is buying a television, like a 65-inch television, plasma TV. That thing is gonna lose value the moment you buy it. It's a depreciating asset. It's not even an asset. I don't even know why they call it a depreciating asset. It's not an asset. Anything which makes you lose money is a liability. It's not an asset. Okay, so once again, most people think that the only debt they have access to is bad debt, which is not the case at all. Okay, if you keep buying cars and like luxury properties and yachts and boats, well, yeah, then it's bad debt because it's gonna lose money over time. If you buy dividend stocks, if you buy real estate with it and rent out that property, then it's an asset for you. Even if you live in that property, it's an asset for you. I mean, logically speaking, but my rule is that if something doesn't pay you, then it's not really an asset. So I hope you understand what I mean. So there are two ways to go about it. There's good debt and there's bad debt. The second thing to understand is, I talked about debt, and the other thing to understand is inflation. Now, because the central banks keep printing money, it doesn't matter what country you're in, because they keep printing currency, not money, and sometimes even billions of dollars every single month, you will find inflation. Okay, the things that you buy will keep going up in price, not because the things themselves are going up in price, but because your currency is going down in value. There is almost no exception to that case, and that is why 10 years ago a dollar could get you a lot. Now it doesn't. Things did not get expensive. Your dollar or your rupee, whatever it is, wherever you are, it got less valuable, which means that you need more of it to survive. Okay, to buy the stuff that you always would have to buy. Now, how do you counter inflation? Well, you buy assets which you know for sure are going to go up in value. Any asset which indexes or adjusts for inflation is your friend. The prime example for this is real estate. 50 years ago, properties in certain parts of the US were, I think they were like $1,000 or $2,000. Now they're at least $60,000 to $120,000 because the currency has gone down in value. So you need more currency to buy the same thing. But the good thing is, those properties, real estate has maintained its value. It adjusts for inflation, and that is what you need to happen for you in order to build wealth, not something that loses money over time, loses value over time. Okay, so understand please that if you're doing a job and you get a 5 or 10% raise, annual raise because of inflation, you can be sure that there's a very good chance that the things you absolutely have to buy, the necessities, are going up more than that value. And this is one of the reasons why the middle class is struggling these days. Okay, in 20 or 30 years, you will only find people who are wealthy or people who are poor, because the middle class is getting decimated right now. If you don't believe me, just look it up online. Okay, there are a lot of news articles about that, because wages have not really increased in the last 30 years, but prices have, and it makes everything really unaffordable. So please understand that this is because of inflation, and that happens because the central bank keeps printing millions and billions of dollars of currency every single month or every single year, depending on where you are. The only way to hedge yourself, to protect yourself, is to buy assets which adjust for inflation. Okay? Third, taxes. Now, once again, it's going to surprise you, but there are good taxes and bad taxes. Most people hate taxes because the only taxes they know are bad taxes. And if you are exchanging time for money, and if you have earned income, well, the only tax that you have to pay is bad tax, because the more you earn, the more you pay the government in taxes. Sometimes even 50%, which means that you are working six months every single year for the government. Doesn't that sound crazy? Okay, so a lot of lawyers and doctors and investment bankers that you personally know are not making $300,000 or $400,000 or $500,000 a year. They're making 50% of that. No one talks about that, and I don't know why they don't talk about it. Right? Taxes can be your friend if you're a business owner and if you are an investor. Why? Because the government rewards people who become business owners and investors because they contribute to the economy. Okay? They invest in the infrastructure of the economy. They give jobs. They hire other people. They invest in housing, in government assets, all that stuff. Which means that many of these people, even though they might be earning millions of dollars every single year, because of these regulations by the government, they're paying 0% in tax. And now a lot of people are probably thinking, well, then the game is rigged against me. No, it really isn't, because the tax code doesn't really care who you are. All they care is if you invest in this way, you will get taxed at 0%. If you earn your income in this way instead, you will get taxed at 40% or 50%. So guys, it is totally up to you how you use your income, how you earn it, how you spend it, how you invest it. That is totally under your control. Okay, all you have to do is figure out how to invest and where to earn money so you can dramatically reduce your taxes. Okay, and this applies to pretty much any country out there in the world. Okay, so if once you master these three forces, debt, inflation, and taxes, you will be vastly ahead of most 99% of people in the world, and you will see a dramatic increase in your wealth. Because please understand that the financial system, the monetary system that was back there in 1971 is not there anymore. In fact, far from it. At that time, money was money. Now it's currency, and this distinction alone is huge. Nothing is the same anymore. All right. So yeah, I think I'm pretty much done with this content. Let me know if you have any questions. And as always, guys, thank you so much for watching this video. If you found it useful, please share it with your friends and family. Hit the like button, subscribe to my YouTube channel, and I will make more videos soon. Take care. Bye.